While most people are focused on Ethereum and Solana, a blockchain called Sui quietly grew from $211 million to over $2 billion in total value locked in just 1 year. Sui is a Layer 1 blockchain built by Miston Labs, founded by former Meta engineers. It uses the Move programming language and processes transactions in parallel, making it significantly faster than traditional blockchains. And the 5 projects driving that growth include one that captured $80 million in deposits in just days, by being in the right place when disaster struck. Let us begin. At number 5, Sui-lend. Every mature ecosystem needs institutional-grade infrastructure. On Sui, Sui-lend is building exactly that, a lending protocol designed for traditional finance institutions entering DeFi. Built-in KYC verification for whitelisted pools. On-chain audit trails for regulatory reporting. At number 4, Scallop. Scallop is Sui's second largest lending protocol. After the security incident that shook the ecosystem in May 2025, its safety-first approach became its biggest competitive advantage. Multi-signature treasury management, time-locked upgrade mechanisms, continuous smart contract monitoring, an insurance fund providing partial coverage if something goes wrong. Think of Scallop as the vault. Slower to access, harder to crack, but significantly safer when chaos hits. For risk-conscious users who want yield without excessive exposure, Scallop became the go-to alternative. At number 3, Cetus Protocol. Cetus is Sui's leading decentralized exchange and pioneered concentrated liquidity on Sui. The same mechanics Uniswap 5.3 brought to Ethereum. Providers concentrate capital within specific price ranges where trading actually happens. The result, higher fee earnings and significantly less slippage. At its peak, Cetus held nearly $280 million in TVL. At number 2, Blofin. In September 2025, Blofin became the third largest protocol on Sui with TVL exceeding $220 million. When Cetus collapsed, users needed somewhere safe. Blofin's Alpha Lend lending product had launched just weeks before. Within days, it accumulated over $80 million in deposits from displaced users. Right place, right time, right product. But Blofin's real power is derivatives. It commands 96% market share of perpetual futures trading on Sui. Cumulative volume approaching $78 billion. Daily volume exceeding $400 million. Up to 20 times leverage on BTC, ETH, SUE, and major altcoins. Centralized exchange performance, fully decentralized custody, and at number 1, Navi protocol. Everything on Sui flows back to Navi. Think of it as the reservoir. Every stablecoin deposited fills it higher. Every borrower draws from it. And interest rates are the pressure gauges showing real-time supply and demand. Peak TVL exceeding $700 million, nearly half of all value locked on Sui at its height. Supply assets, earn dynamic interest. Borrow against holdings without selling. Navi's BTCFI integration unlocks Bitcoin liquidity for yield generation without requiring holders to sell. A massive untapped pool finally being put to work. And when the Cetus breach hit, Navi's team was on a video call within 30 minutes. By midnight, all borrowing was paused. By week's end, independent auditors had cleared every contract. The Cetus breach taught Sui a lesson every market learns. Speed and returns attract capital, but safety and trust keep it. Sui is not waiting for permission to compete. It is already building the infrastructure. This is education, not financial advice. DeFi carries smart contract risk, as Cetus reminded everyone. Do your own research. If this opened your eyes, subscribe. We break down the ecosystems most traders overlook. Which Sui project interests you most? Drop it below.